and on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader
every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we are finally ending this week. We are about 3 hours away from the close here. And to quote Kevin Hanks, because I think it's a really good point, if we closed here, I think the bulls would be happy. We need markets to shut down as it is.
Yeah, it's certainly a welcome tone shift in the markets versus the rest of this week. We'll see where things do shape up in about 3 hours from now. But Jenny, is there any follow through? That's ultimately what I think investors will want to know. I can't wait for next week.
I know, and next week we do still have some earnings to get through, but we're in definitely that lull, it feels like, as far as news. But lots of news today. We have gotten several updates from the UAW. We also have a ton of equity news. So as always in the show, we'll be kicking things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes. FOMO will be looking at Instacart's week debut as they did IPO earlier this week. So we'll look at some of the price activity that has been less than stellar in that name since its public offering. Then we'll revisit the UAW. Renita Young will give us an update on what we've heard out of the president just in the last several hour or so. And last but not least, we will look at Squarespace as it did get a bullish call from UBS today.
Squarespace seems like the perfect stock for someone like George Tellis to walk us through. So I'm looking forward to that. The cart conversation is a good one, and we're going to have it at a great time. If things can stay as they are now, it is $30.03, and IPO price was $30. So it's very, 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 very important level that it's currently at. So I'm looking forward to FOMO as well. But upvote, downvote, we're all over the board here again. But I think you can try to tie these names together as retail names, although I think that'd be a pretty loose comparison as we're looking at names from Amazon to Costco to Ralph Lauren. First one, though, is Nike, the athletic retailer, the apparel retailer. You see it everywhere. One of the most recognizable brands and logos in all of brands and logos. But unfortunately, it hasn't been a great last few months and year for Nike.
It hasn't. So Nike's down 22% year to date, which puts it in the bottom tier of retail or athleisure performers, really. We need some love from Nike when they report next week. They're expected to disclose their quarterly figures on September 28th after the closing bell. Now, as far as expectations go before this event, we have seen a lot of analysts update their coverage this week as a result. Wall Street is expecting 74 cents a share on revenue just shy of around $13 billion. But with shares down 22% this year, analysts are highlighting the prospective performance and trajectory of the overall company. Oppenheimer reiterated an outperform rating with a $150 price target, saying that we've seen continued demand in athleisure and the rationalized channel inventories as pivotal points. They highlighted the fact that Nike's forward four-quarter PE multiple of just 24.2 times, and he views the subdued street forecast and guidance as achievable for Nike. Stifel still maintaining a buy rating, so even more optimistic with $130 price target here, saying Nike has underperformed since its last earnings print, reflecting some of the uncertainties that have weighed on various markets. But the market, he said, is longing for proof of execution from Nike, as right now they have anticipated a lot of alleviation from some of these impediments to their margins, as well as right now the potential for some rebound in Nike overall shares. So this analyst has a buy rating, feels optimistically, $130 price target too. Implying a good amount of upside from here. Analysts on average do see upside from where we're currently trading. There are 23 buys still in this name, 8 holds, 4 underperforms, and 1 sell. But it has been a really disappointing year for all things Nike, I think due to a lot of its correlation overseas in China specifically.
Disappointing week as well. This is one that we kicked off our shows earlier in the week with Rick and charted ahead of this earnings expected next week, I believe on Thursday, that the stocks continued lower. So it's been weak. There was analyst chatter this week that it might be a weak quarter. And we talked about how that sets up for interesting dynamics. If there's pessimism, the stock's struggling and it sells off into earnings, you can sort of have that sell the rumor, buy the news situation. Way too early to say that that's happening yet, but we've certainly seen the beginning aspects of that. As this stock was like $95, $96 earlier in the week, it's down at 91. Granted, the overall market sold off as well.
Right. To speak to some of that, it's down. Yeah, you have 5% this week, so it's been a pretty brutal week for all things Nike shares. Our next name today, though, is completely the opposite, because we've seen consistent outperformance from Costco. Not only this year up 23%, but just over the last several years, this name was a pandemic darling, as most of these big box retailers were. But this name today seeing some coverage as HSBC did start coverage on several retailers, including Costco, but also Walmart, Target, Home Depot, Lowe's, and Dollar General. They started coverage on Costco with a hold rating and a $600 price target, also implying some good upside for a name that is up about 1% for the week. But the analyst says the U.S. retail sector is a vast market set for further growth with pandemic accelerated digital transformations, but also well-developed offline to online approaches that are still yet to appear in some of their market shares. This name definitely skews maybe more optimistically than compared to a Nike. We are seeing 27 buys, 10 holds. There are no outright bears in Costco shares. They also have earnings expected next Tuesday after the closing bell. So pre-earnings look at Costco here, which always reports to me in somewhat of a rogue nature, given the fact that they do disclose those monthly figures. So it's somewhat of a non-event for earnings, but one that we'll still be watching, obviously. And there's no other real earnings other than Nike and Costco next week.
It can move. It's maybe just less volatile because we hear from them more frequently. So I wouldn't say that it doesn't matter, of course. It's just less new news because we just heard from them as recently as a month ago. And that's typical for companies. The more information you have, the less you're going to be surprised, and they're just a little bit more transparent. I recently joined Costco. Ever since I've been driving around the city, it's been easier and things are more accessible. You need like a treasure map to go through that. You got to go in there with a plan. And we're going to talk cart later on in the show. But you were talking about this the other day on the show, how cart used to allow you to shop at Costco. Heck, I might use cart even though I can drive there and do it myself, just so I don't have to try to navigate what is the chaos that is Costco.
It's honestly worth paying the premium you pay your Instacart driver to go do it all for you. I haven't been in a Costco in years. That's not to say I haven't shopped at Costco.
Bring them out.
Yeah, right. You have to go in. You're right. I feel like I'm an outsider. Everyone else knows where they're going, and I'm like the odd man out at a Costco, probably because I don't frequent them very often. But our next name today, Ralph Lauren. This name's up 6.5% this year. It's fallen back about 1% this week, and it's now about 3.5% for this month. Now, we have seen growing international market share that Raymond James says should lift shares. The firm did initiate the stock with an outperform rating and a price target of $135 a share, which implies about 20% upside from where we closed yesterday. The analyst said that they like this setup where expectations have come down, with the stock down 7% in the last 3 months, as well as estimates appear to be a low bar, especially in North America and wholesale. And the valuation, they said, is attractive in their view, given the price to earnings ratio of around 11 times. The analyst also cited Ralph Lauren's increasing discipline with cost savings as a driver behind its improving margins. Well, over the last few years with COVID, Ralph Lauren has worked to create a stronger foundation to generate growth at a healthier base. They said that this has really elevated this iconic brand, right-sizing its wholesale distribution, as well as its digital capabilities. All of this optimism we haven't really reflected in shares, and I think that's somewhat what this analyst is saying. saying, they're sort of highlighting the underperformance as a reason for optimism, not necessarily Ralph Lauren as a massive growth driver going forward.
This is the important reason as to why reading that commentary alongside the ratings, alongside the price target's critical, because the more it's valuation call, the more it's, hey, the stock's oversold, it's interesting. It's more opinion, less facts drawing those conclusions based off valuation or what it may be. U.S. Ryder Cup team, that's going to kick off, I think, next weekend, outfitted by Ralph Lauren. So we'll see if maybe they get the victory, maybe that'll spur some sales. Who knows?
I always think, though, they do a good job with those. They've done the Olympics a few times, and they tend to do a good job with that. I will say, for team outfitting, Ralph Lauren is a classy name. But our last name today is all things Amazon. Amazon did announce that starting now in 2024, their Prime Video shows will be featuring advertisements. They did say this will be limited advertising, and they do attempt to have fewer ads than the linear TV and other streaming TV providers. Ads in Prime Video content will be introduced initially in the US, the UK, Germany, and Canada earlier next year, followed by France, Italy, Spain, Mexico, and Australia later in the year. No action is required for these Prime members. They're not making these changes in 2024 to the price of the Prime membership. And Alex, we've said this a few times that in terms of streaming services that make sense, Prime Video is just like an add-on because you pay. I mean, I'm paying for Prime based on the shipping capabilities, the different e-commerce offerings, not because of Prime Video. It's just like this added sort of extra to monetize that and to say, hey, you could pay $2.99 now if you don't want ads. I think is genius because, first of all, that's a relatively affordable option, but also the fact that they're going to have ads now on what is sort of an add-on bonus to their other subscription makes perfect sense.
Here's what's really funny that you say that. I can't remember the last time I watched a Prime Video series. I'm sure there's great ones. I haven't encountered them in a while, but I know that there was a point in my time when I did. And I don't know if I have plans to re-engage with that platform. But because I despise ads so much, I'm probably going to pay for the ad-free just solely because if I ever do, I don't want to see ads.
I completely agree. And you know what's funny is right now they don't have ads, so I actually watch Prime Video probably more than any other service because there are no ads as of right now. So $2.99, it might keep me, I will say. So we'll be looking more into two of our upvotes today. We'll be upvoting Costco as well as Ralph Lauren. We've discussed the other two pretty heavily this week, so we'll take a pause on those. Dive more into the technicals on our two upvoted names as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time to look at our two upvotes today, those being Costco as well as Ralph Lauren. Diving more into the technicals, here is our chart master, as always, Rick Ducat. So Rick, we'll start things off here with Costco, as it has been I would say, more resilient player. It's not necessarily a huge outperformer, but up 20% this year. Walk us through what you're seeing from a technical standpoint.
Certainly not a weak chart. We're up 25% off the lows. And we're seeing a shape in this chart that I've seen, just kind of speaking anecdotally, very often during these charting segments. Kind of this lopsided triangle type shape here, where we have a kind of longer term to intermediate term uptrend line, and then a shorter term downward trend line, giving us this kind of unbalanced triangle type shape here. And I think what this suggests is that a lot of the uptrends that we've been seeing are starting to falter a little bit, starting to kind of lose our momentum. Because if you look at the chart of Costco here, take a look at this 566.17 level. That's the site of our best close from back here, this red dashed line. We haven't made a close above that point since we made it back in July. So we've had a few intraday excursions beyond that point, but we never really have crossed it with any convincing strength here. So kind of just trending downward off the highs. We're not down significantly. We're down about less than 2% from those yearly highs, but it's still telling that we haven't made any kind of push beyond them yet for the past few months here. Now, to look at some other assessments of trend here, you can see that once we broke above this 540 level here, that was about where we topped out all the way back there. Once again over here as well, we had a nice breakout. Since then, we've bounced around a little bit. We formed some lows near 551, and that was another point that we had our eye on here because we topped out around that point there. But looking at kind of the general situation, the trend is still up, but we're not making new highs. So our moving averages are all tilted up. Price is trading above all of them, but we're still kind of in a limbo state almost, Jenny.
Yeah, and I think that's really well said. So we have seen an overall uptrend, but some recent choppiness. So what are you seeing as far as now momentum goes and somewhat of the direction of this trend?
Sure. And one of the things that I like to look for when looking at RSI is you can use trend lines on it similar to price. So starting with these yearly highs right here that correspond with the highs, we had this kind of downward slope that took us for a few months here. We did break above that point though, and we also shortly afterward broke above that 50 midline here. So that kind of coincides with this break right around here, about around 540. So that's the kind of thing you can try to look for as a leading indicator, would be a break through this type of trend line on the RSI. It did follow through in this case. We did have some nice gains. But as I said, now we're kind of in this waning state of the uptrend here. You can see more recently trending down once again, still in bullish territory, still above that 50 midline, but not really making a lot of progress. So that's kind of the theme, I guess, of this chart is the trend is slowing but still up. Momentum is slowing but still up.
So what about some price levels to sort of take away here? What are you watching for Costco shares ahead of their earnings, of course?
Yeah, there's a lot to unpack with this one here. Let's say that you're more bullish in this name. You're thinking that we're going to break through the ceiling near 566 that we've established numerous times over and over again. Around this level is where we stopped out. If you're thinking we're going to go beyond that into new, fresh yearly highs, take a look at the +1 standard deviation channel. Consider including that on your chart. This is one standard deviation away from our linear regression line, our blue line, our line of best fit here based on closing prices. That comes in near 576. That could be one potential target. We also are kind of in the middle of this volume node right here near 560, this area of heavy trading according to our volume profile study. This is an area where the bulls would want to hold if we start to break below that. There's a lot to choose from here. We've got the 551 level, that's the site of our highs and lows from back here. We've also got the confluence of our linear regression line and our 63-day EMA near 545. Finally, that 540 level that I mentioned as well.
So, right, I think really great takeaway here into that earnings print next Tuesday. So now in trading this name, Alex, walk us through what you're thinking, considering the fact, like Rick said, we've seen somewhat of a pullback as of late, still an uptrend though overall, maybe leaning more neutral to bullish.
You know, one of the first things Rick said is this is a chart pattern he's starting to see a lot. Well, this might be a trade illustration that you've seen a lot because we've looked at them a lot. We're looking at a skewed put butterfly in Costco ahead of the earnings, strategy that is typically associated with high probabilities of success success because the break-evens are quite a bit below the current share price. And that's what we see here. So going into an event, a little bit of unknown, potential for surprise can lead to outsized volatility in the stock. And so we're looking at a strategy that has a break-even down at 537. Right now, the current share price is 561, so it's quite a bit below the current levels. What we're looking at in particular is we're going out to next Friday, that's September 29. We're buying one of the 542.5, selling two of the 540s, and then defining the risk, going $7.50 below and buying one of the 532.5s. Creates this risk profile, creates a situation where you do this for a credit, in this case 50 cents. Anything where all of these options are out of the money and they expire worthless, you simply would keep that credit. That's $50. But where things get interesting, of course, is when it goes in the money and it pins near that short strike. You can see this thing expand to as much as $300 at expiration, theoretically. And then, of course, we talked about that break even down at 537. All the risk taking place below. And once all the options are in the money, that's where the risk levels off. And it's defined to $450. So risk defined, high probability of success, but an omnidirectional element to this, Jenny, where it's neutral to bullish, but the best case scenario is actually at a price that's lower than the current share price. That'll put your brain in a pretzel, but you just got to trust the platform here showing you that risk profile at expiration.
I was going to say that will put my brain in a pretzel on this very slow-moving Friday. But now let's shift gears here and look at our next name, that is Ralph Lauren. Ralph Lauren is pretty much unchanged on the day. This name has been able to hang on to its year-to-date gains ever so slightly. Not a huge outperformer. It's fallen back about 3.5% this month, Rick. But this analyst does see price target of, around 20%. With $135, so they do see some upside from here.
Yeah, basically looking for a return to these 52-week highs of 135.76. So just above that point was our yearly highs, that 135 target there. And kind of a sluggish chart really year to date. We're only up about 6.3% since the start of 2023. You can see that we have had enjoyed this uptrend for the bulls here going across this lows, but problems have begun fairly recently. We're down about 17% off those highs. The downward move has taken us below all three of our exponential moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day. The moving averages themselves, the 21-day and 63-day, they're starting to tilt downward here. They were sloping upward. Once we peaked out shortly after that, they started to slope downward. They haven't recovered since that point. That tells us that the trend, at least in the shorter term, is down. Our long-term 252-day EMA, much more sideways, has barely moved at all for about a month or so. But one big thing that's happening today, one bad thing for the bulls, we're breaking below this trend line here. And I was wondering if we might see a little bit of a recovery today, but we haven't made new lows, but we certainly haven't fought back much of that ground that we lost here. The bright point is we have not fallen below our previous lows near 111. That would be a real danger point to be on the lookout. So the trend, at least in the shorter term on this one, is starting to be more downward.
Okay, as far as RSI that goes, walk us through what kind of momentum you're seeing in this name.
Sure, and we can see here that this is a good example of how a move into the oversold area can be a sign of further price degradation here. You can see it matches up here with here where we had this break below the 119 level. That was a point where we topped out here, then bottomed out here. So we had that sign of worsening momentum here, this bearish signal. We bottomed out near 111. We made our way back up a little bit. We never recovered above that 50 midline though. So momentum, the situation right now is still bearish, still tilted toward the downside here, but we haven't crossed into the oversold area. Beware of a cross into that oversold area once again, as well as a break below that 111 level, that green dashed line there. That would be a dangerous piece of evidence there. And remember, RSI is used to confirm what you're seeing with price action. RSI shouldn't be the thing that you're making your decisions based on rather than price. That would be kind of the tail wagging the dog, so to speak.
And like you always say, watch some of these indicators into the close, because we know that some key price levels can oftentimes change throughout the session. But lastly, support and resistance, what are you watching here in Ralph Lauren?
A lot going on in this chart. And when we add volume profile to the mix, you can see that we're really trading right in this area of the volume volume profile point of control, the area of heaviest trading during the past year. So even though we've broken below this longer term trend line, we're still at a supportive point here. And I think that if you were more worried about the downside, like I said, the break below 111 would be the dangerous thing to be on the lookout for. You could find some support just below 108 based on an old gap that we formed shortly after earnings back in May. Now, because the analyst note is more bullish, 135 was their target. Let's consider the upside more. There's quite a bit of choices for resistance, and resistance doesn't necessarily mean it's going to stop there. Those are just places where we as technicians look for extra emphasis based on these indicators that we follow and these price levels. They're ways you can help choose strikes based on your outlook here. So some levels that caught my eye, this big volume node right here near about 117. The 119 level, like we mentioned, a high and a low from right there, this red dashed line. And then beyond that, the 125 level, I thought, was a point where we topped out around there and there. So that could be another area to watch as well.
Yeah, I think really great takeaways. And both of these retailers that fall obviously in different realms of the overall retail world, but we'll leave it there. Appreciate all the insight as always, Rick Ducat, our chart master. So now trading this name, Alex, obviously a name that has seen very different price activity as of late than, say, a Costco. But walk us through what you're thinking, leaning into some of this optimism, perhaps following this analyst note that provides 20% upside in a more bullish example trade.
Well, the first thing you might notice, no weekly options available in RL, so we're limited in some of our selections based off of that. We looked at a calendar spread month over month on our way to 135. Maybe we'll have to go through 125, especially on a shorter time horizon. That's what we're centered here. The 125 call calendar in Ralph Lauren, selling Oct, buying Nove, $1.25 debit. So 125 bucks in risk on this trade. You see that over my shoulder here. We know with the calendar spread, one, it's customizable, but we say this every time. It's more about precisely locating that price target, selecting a strike that best reflects that, because you got risk in both ways. This is a bullish strategy, but there's risk to the upside. This thing skyrockets through the upside. Well, you take risk to the upside as much as that full 125 debit. The same to the downside. You can see that there. If it ever moves up, well, this thing could be at risk as well. So need to move towards your strike, and oftentimes the strategy, because of its volatility dynamics, typically associates itself with higher volatility, going from lower to higher implied volatility, better way to say it. Positive Vega, so one that wants expansive implied volatility, and it also wants to move towards 125. But you got a different opinion. You got a more bearish take, more neutral, or even more bullish. Maybe some adjustments to the strikes could be in order.
Right, highly customizable here. No real massive catalyst on the horizon either for Ralph Lauren, as it did already report this quarter. But that'll do it for this segment. Now coming up next, it's time for FOMO. We are looking at the IPO of the week. That was all things Instacart. Shares are down about 1.7% today, but seeing some leadership shakeup. We'll discuss more on that company coming up next.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our look at a developing story with Kevin Green, senior markets correspondent for the network. So Kevin, to my understanding, we're looking at Beyond. We're not looking at Beyond on an optimistic day because shares are seeing some selling. Am I correct?
Yeah, definitely cannot catch a break at this point in time. The shares are down about 3.9%, and that is after Piper Sandler actually lowered the firm's price target to $3, and that's down from $6, and they keep their underweight rating on the shares. Now, they do remain bearish when it comes to Beyond Meat's EBITDA margins. They do not see any type of tailwinds in the near term when it comes to their margin profile, and they also believe that the growth that they continue to try to project when it comes to Beyond Meat just has not materialized here, and there will be maybe marginal improvements in the second half of this year, but nothing that's going to show really good growth. They also note that U.S. retail sales for the company actually show a 19% decline in revenues just in Q3 alone here, and they do recognize that there are some structural challenges when it comes to the company that cannot immediately be fixed. Now, one thing to also note, we actually see around 37% for short interest in this name, and when we have seen the height during the pandemic, it just has not been able to really catch a bid. Now, the question here, Jenny, and I'm not trying to speculate, but you kind of have to think to yourself, when do we start seeing maybe some chatter around some of their competitors that might want to diversify their portfolio and maybe want to pick off a piece of their business and or try to acquire them as a whole? I think that's going to be the next question a lot of investors are going to have here.
That's a really good point. I think the concern is this is like a highly saturated market, right? There's so many competitors out there right now. You have to be best in breed, and there needs to be price parity. That's always been my issue when looking at a name like Beyond, is right now with heavily inflated products at the grocery store, why would someone that's, say, like Flexitarian be buying the more expensive fake meat? Why not just buy cheaper real meat? And I totally get it, because I'm like the Flexitarian demographic, but they have some issues here. So as far as outlook now going forward, what are your thoughts? Because this was, I believe, part of like the zombie stocks. That was a note we got from an analyst earlier this year that was saying we could see some of these completely left for dead.
Yeah, I mean, so there is a market for their products. I think the fact that they actually tried to go out and really expanded way too fast during COVID, I think has been the headwind and the problem. If this company would have started this process right now in this type of environment, they would have been able to scale themselves accordingly. Now, they have been able to expand their brands within several different grocery chains, but I think right now it is a branding issue, and that's why I was talking about maybe potentially partnering with somebody else in the industry that has a well-known brand that can kind of get away from the bad stigma of potentially having quote unquote fake meat. Now, I don't believe in that, but at the end of the day, that's what some of the public does believe. And so rebranding can definitely help this company out, but unfortunately that costs a lot of money to do. So I think that's why there could be conversations, and there may be conversations here in the future that maybe they could partner up with somebody that could help them with that branding message out to the street. And you're right. I mean, from a cost standpoint, it is very expensive, but if you kind of compare it to what's happening in the beef market in itself right now, I mean, beef is actually fairly expensive as well. If you're looking at ground beef, which is on the cheaper side of the overall cut, or even some of the expensive meats that are out there. So I think there could be some parity. They're just not at scale right now to be able to do so.
Yeah, and I do think there's a public perception problem. Although to those naysayers, I'm always like, do you know what's actually in your real beef products? They're not usually 100% meat if you actually look and read some of the ingredients. But I do think that I can understand the argument in both sides, obviously, but we will leave it there. Appreciate the breakdown on Beyond. Unfortunately, on its lifetime lows today. Kevin Green, senior markets correspondent for the network. Now I'd like to bring back in Alex, and it's time for FOMO. As we were looking at Instacart, which has been the story of the week, no doubt about it, after going public earlier, and you made a really good point. We're pretty much just back to its IPO offering at $30 a share here.
Yeah, and maybe you get Instacart so you don't go to the stores, but if you went to the store, you'd see a lot of Beyond on the shelves, so that might explain some of what you guys were just talking about. Even in the shortage times, when you read about, hey, things are out of stock, always saw stock of Beyond Meat at any store I went to.
You know, and or you do, or it's just not carried by the store. Like, I find it's either like a surplus where they're not moving off the shelves, or it's like there's like none at all, which is also a major problem. But we did get some news out of Instacart today, company specific, as their former Instacart executive is now returning to the company really as a member of the board. So that was seen, I think, we're not seeing a positive price activity today, but I think seen as some loyalty right now to their current CEO, Ravi Gupta, who did serve as their CFO from 2015 to 2019 and Chief Operating Officer from 2016 to 2019, is now a partner at a venture capital firm who did invest $50 million in Instacart in 2021. That's a top shareholder still. That she did say she's leaned on this company really prior to this IPO. They did delay its IPO to seek some revenue and profitability guidance. This name, I think, IPO'd at a very interesting time. At around $30 a share was its initial offering price. It was valued at around $10 billion when you look at Instacart and you see its peak pandemic performance back in 2021. It had been valued at around $130 a share, and we'd seen a market value of around, significantly greater than where we currently are. So that, I think, like $40 billion. So that is the fact that we've seen this pullback. This name did get some love from the fact that everyone was locked down. You had no other choice. And I always say it was the biggest beneficiary of the ultimate life hack, not having to pay for a Costco membership, but still being able to order Costco on Instacart. Things have normalized, though, because the world has opened up. So a lot of these names, DoorDash is included, has also had to adjust. But DoorDash, to me, is like the ultimate restaurant play. Instacart is a grocery store play more so.
Yeah, no doubt. Maple Bear, as we see it up there on the screen.
I cannot call it Maple Bear. It's Instacart to me.
Yeah, doing business is Instacart, of course. The symbol, cart, the stock ticker gives it away. But I like that you talked about the Ravi Gupta story. Obviously, he's a partner at Sequoia, but knows the business well. So having members of your board really understand the ins and outs of the company, I think is critical, especially when you're at a pretty critical time, I would say, in the company's history. A lot of times this public offering is that launch point to greater success, or it can be sort of the undoing for many. We've seen that, of course, in the last few years too, with so many of the different SPAC mergers and things that have taken place. Excitement around IPOs came back, ARM highlighting that, but ARM tied to AI in semiconductors, has former ties to sort of NVIDIA trying to buy them, not getting shut down. There was hype around that. Instacart is a very, very popular company, is a service that many use, but does it have the same excitement as an AI semiconductor name? I don't know, and I think we've already sort of seen that in terms of the stock basically making a U-turn, going back for more, I guess, at the store, because this thing had a really, really nice first day, and that's really the end of the story thus far.
Right. We saw shares plunge after that 23% jump on its IPO day. But I think that what you're saying is a very good point. We have a lot of excitement right now around all things AI, and a company like ARM was sort of, I'd say, pointed in the right direction with its IPO. There was so much enthusiasm. Instacart, I was reading, is deemed a tech name. I don't know if I'd call it that. I'd say this is a discretionary play, because right now, this is something that is, I would say, a luxury. You're paying for a service. You're paying for someone to grocery shop for you. It's not cheap. I've done it before. The fees are ridiculous. It's delightful to have your groceries delivered to your door, but if you're looking to pull back, go to the grocery store yourself. To me, that makes perfect sense. A Needham analyst earlier this week did issue a hold rating on their stock, saying they anticipate the company's growth will be more difficult over the next 3 years versus the prior 3 years, saying their expectations for this post-pandemic grocery sales overall in the U.S. are likely going to be below consensus. I get that completely. Also, just because what else did you have to do at home versus I feel like I was just constantly grocery shopping because I was constantly eating and cooking during the pandemic. That's changed.
One thing that I don't think we've talked about is how easily disrupted this is. Mm-hmm. If Walmart decides they want to offer this as part of Walmart Plus, they simply could just do that. Obviously they're going to have the infrastructure for delivery and things of that nature, but you already see curbside pickup. If any company could do this through Whole Foods, it would be Amazon. We know they have sort of the fleet when it comes to Prime delivery already happening. So I think, in the interim, this is an expensive, that last mile delivery that was such a topic of discussion in a name like Amazon, 5 years ago. That's still an expensive aspect to this. But, Instacart's found a way to navigate this for now. But as you said, it's discretionary. It costs a lot more to have this done for you than going to do it yourself. And so maybe it skews to heavily urban environments where maybe someone doesn't have a car and their choice is, walk to the store myself, go in and then lug all those groceries back or pay a little bit of a premium. But that's not going to, fly in the suburbs if budgets get a little bit tighter.
Absolutely. And gosh, I have been a victim of my own overbuying a few times because, as you know, living in the city, you buy too much, then you have to carry it all home. And the whole time you're like, I made terrible decisions. I bought way too much. So Instacart's great. It does alleviate all of that, but it's a luxury, no doubt about it. So trading this name now, obviously volatile, obviously seeing some selling from that initial pop earlier this week. Walk us through what you're thinking here.
Well, there's options available now, so I think that changes the conversation a little bit. You can actually be a bit more strategic with your process, and so it's a high volatility name because of its new aspects to the public markets. There's still price discovery going on, as there is with every stock, but that supply-demand dynamic is maybe a little bit more in balance. Than it is imbalanced right now than it is in other names because it's new. There's just less known about this company, less trading history to go off of, things in the technical space, etc. Also, from a fundamental standpoint, we haven't gotten several quarters of earnings in a row to get an idea, a baseline for this. So I looked at a neutral to bullish strategy, leaning into its recent weakness, pull back to its IPO price. It has a low of 29 and some change, and so I went just below that. 29.55 is the low intraday, and so I went to the 29 put, going out to the October expiration, then went $3 below that, defining the risk, Jenny. So $3 wide spread, collect $1, 2-to-1 risk-reward ratio, right in that wheelhouse of our loose guideline, 30 cents on the dollar to a third the width of the strikes. This is exactly 1/3 the width of the strikes. Break even would be a good $1.55 below the, at this moment, all-time low for the stock. So you have that working for you with that break even at 28. $200 in risk to make 100, relatively high probability. Of course, we don't know. CART could be there this afternoon. This stock's moving around a bunch. It's down almost 2% again today, right at that 30 mark. But if you're a believer in this stock, you think that budget's going to hang in there, and maybe you just think, hey, at the IPO price, this thing might have buyers come in. It holds that level. That's all you need for this. You don't need it to go up a lot. You just need it not to go down.
Yeah, I think really well said. And obviously now this name is I'm sure, seeing some heightened interest given the fact that we can trade options. So more ways to look at exploring potentially trading Instacart, of course. But that'll do it for our FOMO segment today. Now coming up next, we will shift gears here, look at all things that is the chaos behind the UAW strike, the latest on what this means for some of these auto companies. Renita Young will have this story for us coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Alex Coffey alongside Jenny Horn. Equity markets giving up some of those early gains. So we talked about at the top of the show, 3 hours to the closing bell. Kevin Hincks not getting his wish of closing that thing early. We do have equity markets under pressure. Mary Daly speaking at an event on the economic outlook, suggesting inflation unlikely to reach 2% goal in 2024 seems to be the culprit. If anything else to update, we will as the story unfolds. But let's bring in our next guest, Renita Young, joining us here in studio, senior markets correspondent for the Schwab Network, to discuss the latest on more breaking news, which is all things strikes and in particularly the auto workers.
Yes, the UAW strike, it has now been officially expanded, and President Shawn Fain added 38 more facilities across 20 states to the strike. This is far more than the 3 facilities in 3 different states that they were striking at this week. But so far, if we look at the big 3 automaker stocks, Ford, Stellantis, GM, they've merely been fluctuating this week. It's not a whole lot of activity happening. In fact, just 2 of them are down on the week, Ford and GM. Stellantis is still up by about 0.5% week to date. And so Shawn Fain, president of the UAW, he had a live stream today. He said that there had been some real progress in negotiations with Ford and that they'd included additional job security. They eliminated a lower wage tier and they reinstated the cost of living adjustment, which was a big deal. But the companies are still far apart from the UAW when it comes to the larger economic issues like the pay increase between 30 and 40% spread over 4 years, the end of tiered wage structures entirely for all of them, 32-hour work week, more paid vacation. Those things they're still far apart on. And then another thing, this wasn't intended to become so political, but it has become increasingly political. You see people from both Democratic and Republican parties descending upon Detroit soon to make their presence known and either support or try to get a campaign stop out of it.
See, and I hate that. I hate when things become political. First of all, because I hate the concept of politics. But nonetheless, I also think when looking at these companies, the focus is like how much money are they losing? I mean, GM and Ford are losing, I think they said 100 to 125 million a week on average with this strike ongoing. But to me, what that says is this is 100 to 125 million of people's pay that they're missing out on. So people are not getting paid. That is what the story I think should be, is the fact that right now so many more people in the workforce are going on week 2 of no pay. I mean, it's just already been a challenging environment for a lot of people in the United States this year.
You bring up such a good point, Jenny, because it's not just about the striking workers as well. There are other people who are not striking who are being impacted. These companies have all had temporary layoffs this week as well. They may not have gone through each of the announcements already. But and then there's the concept of if one plant shuts down, these plants are interconnected within their networks. And so naturally, they have an impact on others, and it goes all the way down to the actual auto stores as well at some point.
What I would say, too, I mean, it's natural it's going to become political, right? I mean, this is a big constituents of potential voters. It's essentially the working class when you really think of it that way. It's going to be important for, people of all demographics and political associations to, try to seize on it from opportunistic, but also because it's a big issue right now. That's not that interesting to me. From a trading and reality standpoint for what this means, I mean, we're watching a negotiation in real time. We're starting with 2 sides on very different parts, and they're just, if you kind of imagine it as, they're almost slowly applying pressure here. And so on one side, they'll slowly withdraw workers from a strike standpoint. On the other side, they're going to slowly but surely close down plants and things of that nature to put pressure on the workers. In the end, there'll be a deal. We just don't know what that deal looks like.
And we know in the end that both sides have to make a whole lot of compromise.
Right, and we know in the end, right, or not in the end, right now, no side is winning, it seems like, because people aren't getting paid and these companies are losing money, and it's all that we talk about. I just want a resolution. I like Peace for all, for the companies and for the people. I have no idea what that looks like, though, because it does seem like some people are going to have to bend perhaps where they don't want to. But great breakdown on the story that we've discussed all day long and really all week long in the UAW strike, which we will, I'm sure, be discussing next week. Renita Young, senior markets correspondent here for the network. Now, coming up next, it's time for Under 30. We are looking at Squarespace today. As UBS says it's time to buy. George Chillis will have more on that story coming up next.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Next Gen Investing. It's time for Under 30. Alex Coffey, Jenny Horn here with me. Software as a service company, Squarespace, is the topic of discussion today. Website publishing, content management software company. I feel like this is one that we've talked about with George quite a few times.
I know, I do too, and I've also recently been seeing a lot of targeted ads for it. I feel like it's infiltrating my life lately. Squarespace with a nice 5% move higher today. So here to tell us more is George Chillis, senior markets correspondent for the network. So George, if our memory serves us correct, we've visited this name a few times, but today to the upside. So walk us through what you're seeing.
Well, yeah, I mean, first off, I'll say if you see it out there, there must be something meaningful going on with the company itself. In other words, visually look at something that's obvious versus something that maybe not. But Squarespace is a company that is growing. It's an online web hosting and web creation based platform. It's really focused on independent, small and medium-sized businesses. But they also provide, domain hosting. Companies like GoDaddy are competitors of Squarespace. Also Wix, BigCommerce, Shopify is another one. The other thing about the Squarespace is they're actually encroaching on Shopify's business in the e-commerce space, but they also provide things like marketing management, social media management, which again, it complements their the website creation-based business, which is their core business. But if you look at the trends in the stock over the last year, they've been higher with the stock up about 30%, and that's important because a lot of stocks are higher year to date, but it's good to see the stock higher on a 52-week basis. And some of the analysts are rather bullish on the stock as well. If you look at UBS, they actually initiated coverage on the stock with a $40 price target. They actually see Squarespace, as I mentioned just a moment ago, encroaching on additional market share from Shopify. The other thing is you think about artificial intelligence, generative tools. They're integrating that very well, but that's, again, the case for many of these e-commerce, and of course, internet-based platforms. But at the same time, you got to look at profitability. That's what's really important here, because if you consider 2 quarters ago, the estimates for earnings were 68 cents for the next 4 quarters. Now, fast forward 2 quarters, the estimates have actually risen to $1.01. And so this is very meaningful, because if you consider profitability, growth in sales, which in this case is expected to be in the double digits at 13%, the earnings growth estimates for the company are about 2 times its sales growth. This is also very important because this speaks to better trends in stocks, especially when your earnings are manifesting into higher returns on a rate of change basis compared to sales. And if you look at the forward multiple at around 26 times earnings, it's only trading around 1 times its growth rate. So one would say something below 1.5 times its growth rate is cheap. And I think this is maybe why UBS is actually picking this up as one of their best website creator platform-based businesses.
George, certainly lesser known than maybe someone like an Elon Musk or a Bill Gates or, Jeff Bezos. But quietly, Anthony Casalena, the founder and CEO and chairman of this company, has been at the helm basically the entire time this company has existed. When you're looking at a company that's still run by the founder, who's now chairman as well since 2021, how much do investors need to factor in it almost as investment into that individual and their leadership? If you think of something like Tesla, for example, I think there's a lot of people invested in Tesla because they're investing in Elon Musk more so than Tesla.
Yeah. Well, I suggest it's actually very meaningful. It gives you an idea that, the company's founder and of course, board of directors and executive are still involved with the company. I think that's very meaningful. I'm going to use Instacart most recently. It looks like even the founder of that company has exited the business altogether, even from the board of directors position. So I think it's actually meaningful. It gives you an idea that there's a solid foundational backing for the business. And of course, the involvement of founders are extremely important for confidence, not only in their confidence in the business to maintain presence, but also to grow the business. And I think this is a growing business from a standpoint of Squarespace. I think the market is starting to grow quite considerably, especially when it comes down to individuals, even small and medium-sized businesses that want to create their own websites. They offer very easy to use functionality, and you don't need programming languages or even hire a programmer to develop one. So I think it provides value to customers, and I think that's again why the company's stock has performed well in this environment.
Yeah, and George, I think you make a lot of really good points. And if we're seeing it everywhere, like you said, it must be because the company is doing something and doing it quite well. Because I think getting this name and getting more and more relevance is something that's been very important. As Squarespace is such an interesting tool, but I just think not necessarily as mass scaled as perhaps it should be. But really nice move today, higher. I mean, still holding on to a 5% gain despite some slipping of the overall markets here. But we will leave it there. Appreciate the breakdown on Squarespace. And all week long, George Tellis, senior markets correspondent here for the network. Now that'll do it for Alex and myself for this week of Next Gen Investing. Have a wonderful weekend all. Coming up next is the Watch List with Nicole Petalides.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.